This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com, and I have again with me this morning John Rubino for the second time this week. John is a well-recognized author and publisher of the website dollarcollapse.com. He posts all the best articles that he finds every single day. They're always refreshed and current. And John, I compliment you. You always seem to find the right ones.
Thanks, Gord. There's an awful lot out there.
I do a lot of reading, but I wonder how you manage to cover off so many of those. Do you have help?
I have Google, who takes care of a lot of that. You set up these searches under different terms, and they will send you into your email box the articles that show up that day on that subject. So I get deluged with stuff that way. And then a lot of people just, when they write something, they send it in and directly, and I take a look at it. So it's a very busy 2 hours in the morning to get that site updated.
Well, keep up the good work, and I really hope some of our listeners, or all of our listeners, check it out. It'll sure save you a lot of time to find the right kinds of thing to be reading, and you break it into some really great categories, too, for some of our listeners who have got particular interests, or as those interests change, to be able to move them around, as opposed to scanning a lot of great articles, trying to find something in there. You can get down by subject area. So, job well done.
Thanks.
You wrote an article here this week, The Gap in the Debt Debate. I thought was just a very timely article with us talking about the debt ceiling and in it discussing the amount of unfunded liabilities, because I don't think a lot of people really understand the degree to which the size of the debt that's unreported. And I say unreported that it is not reflected in these debt conversations. It's reported, but not in the same fashion. Also, a huge amount of debt is not even reported. It's what they refer to as off-balance sheet, and it ranges from things such as contingent liabilities, guarantees, a whole series of special purpose government entities and structures that allow them to not have to report it as debt. So I thought we'd kick it off this morning just to try and give our listeners some understanding of the size of at least what we refer to as unfunded liabilities. What are they and how big are they?
Yeah, well, here's how that works. Let's say you're running a business, Gord, and you've got a pension plan for your employees. The government requires you to follow generally accepted accounting principles through which you would figure out what that pension is going to cost in the future and put away enough money now to more or less guarantee that you're able to cover those obligations when they come due. And the federal government exempts itself from that kind of reporting. When we see the deficit and the total government debt out there, it doesn't include the unfunded liabilities from programs like Medicare and Social Security. And if you add them up, if you apply GAAP accounting to those programs, you get this humongous number. It's $80 trillion or $100 trillion, depending on who's doing the calculating and what their assumptions are. And it dwarfs the current federal debt, and it dwarfs the size of the economy. So if that's real, in other words, if generally accepted accounting principles gives you a real number when you do that kind of a calculation, then we owe vastly more than we think we do. We already owe a lot. Just based on what's reported as debt, we owe probably more than we can ever hope to pay off. But that's probably only a half or a third of what we really owe. And so we're actually, in other words, in a lot worse shape than we think we are, and the government's hiding that fact from us. And so the question is, when does all this come due, and when do we figure it out, and what does the market do when it figures out that we actually owe even more than we thought we did?
Why is it allowed to be different? Why would we have a set of accounting treatment that, frankly, in the private sector, you go to jail if you don't report this properly and take proper accounting procedures on it, yet it's not treated this way in the government. What is the difference? Why has this evolved in this manner? Because we're talking, as you said, a minimum of $84 trillion that's not showing, and there's people, Kotlikov up here in Boston believes it's closer to 210, and I'm just talking about unfunded liabilities with regards Medicare, Medicaid, Social Security, and government pensions themselves.
Well, it's done this way because the federal government can get away with doing it this way. It makes its own activities look a lot more benign than they are. Congress has done that in a lot of different aspects of life. They've exempted themselves from laws governing sexual harassment of interns, and you name it, they've exempted themselves from it. They have their own separate retirement plan and their own healthcare system that's way nicer than what we have. And
sort of like insider trading, where they were doing it and public got so upset they said they had to pass a law where they weren't exempt from insider trading?
That's right.
I said, when did they ever allow themselves to do insider trading?
And some of these guys made fortunes. They were passing laws that directly affected given industries and then investing in or shorting stocks in those industries based on the impact of those laws. And it was legal. They could get away with that.
And leaving those meetings where the people who were testifying were going to serve jail terms.
Yes.
Like WorldCom, Enron, etc. Immediately, they were then leaving those and going and doing insider trading. Now,
Yep.
What's wrong in this scenario? So I guess you answered the question.
Yeah, the political class has evolved into an aristocracy that doesn't have the same rules that the rest of us have. That's the definition of an aristocracy from medieval Europe, where two sets of rules applied. One for the knights and the barons and the dukes, and one for the peasants and the merchants. And so we've evolved back into a system like that, where the government and the corporate class can get away with things. These bankers did things that were so clearly crimes, and yet not one major Wall Street figure has gone to jail for the 2009 financial collapse. And none of the congressmen and senators who enabled them to do what they did have gone to jail. And the reason for that is that the rules that apply to us don't apply to them anymore. It's one more step in the process of what we talked about before, the ungovernability of a system that borrows too much money. But in this case, you've got massive amounts of debt that is basically hidden from public view. And because it is real debt, it can't stay hidden forever. But right now they're getting away with stuff. They're able to buy votes with government programs that they don't have to pay for and that they don't have to reserve for. And that allows the guys in charge to pretend that things are okay for a little while longer and to get reelected and collect their salary and to have their nice cushy jobs and enjoy the power that goes with being a senator or a congressman or a major regulator or a lobbyist or whatever. And so they get to keep the game going until they retire with a nice pension themselves, which is not being affected by all the other stuff that's going on. And then we pay the bill when the time comes. So again, when are we going to figure this out? That's the only real question.
A lot of these discussions that I hear are always talking about unfunded liability. As big as they are, John, I would argue that they themselves are even small in comparison to the actual debt that the government has. And where I'm going on this is there are things such as contingent liabilities and guarantees, which are an accounting treatment, and they're not reported, and they're not reported on balance sheets. And so when the government guarantees something, it's taking on a huge liability, and that's a liability that's going to come due, but they don't report it. We have no idea of the size of guarantees, and we've seen this throughout Europe. Guarantees is a form of contingent liability. But contingent liabilities are also things that aren't necessarily guarantees, but they are debt structures or obligations or liabilities that the government has taken on, but something has to happen or trigger it to then become debt that's then payable. It's a very gray and difficult area in accounting, how you classify contingent liabilities and on your balance sheet, and there's criteria to do it. But the governments have taken this to a whole new art form. And the sophistication of the legal terminology to move it off is phenomenal. I got an inkling of it when I was doing my Sultans of Swap series, about 2.5 years ago. And where I started getting all my information was in court cases throughout the United States, court cases through Europe. These were towns, city of Milan, some of the German regional areas, but large centers, including here in the United States, that had some of these deals go bad, therefore were suing parties that were involved. Typically, it was a government agency, department, entity suing J.P. Morgan, Morgan Stanley, one of the major banks who had put together the structure, whether that resulted in a contingent liability. They were often swaps agreements were used in these processes. So it was in reading these court cases that it suddenly became, it was just huge. The magnitude of what was going on, I was stunned. I won't bore our listeners with it. All of these papers that I wrote, Sultans of Swap, are up on my site, so you can go through them in gory detail that lay out all of the various court cases and what was coming out of them. The point here was it showed me the magnitude of the debt in Europe and the scale of it that was going on. It also showed me the magnitude here in the United States that's going on. And it led to further discussions where I started to discover we've got a whole series of new, remember with the Enron and the WorldCom where we learned about special purpose entities and all these names that they had to hide things off balance sheets? Well, we've now got something called PPPs, public-private partnerships that work with RFIs, private finance initiatives that are put together with special purpose entities to take it to another level. And so the message I'd like to leave the listeners is, you think unfunded liabilities are a problem. You haven't seen anything yet. And all of these have come out with one exception. There's never been a court case against the U.S. federal government. Cities, states, either the United States government's never involved in it, which would be the only exception around the world, or it's so big and so large that nobody's touched it. I don't know what the answer is there, John, but it's scary.
Yeah, it is. Well, let's take an example of some companies that people might have heard of. Fannie Mae and Freddie Mac. They were originally set up by the government to facilitate the mortgage market. They would buy up mortgages from banks and give cash to banks to make new mortgages. And they grew and grew and grew. And they weren't technically part of the government, but, wink, wink, they were guaranteed by the Treasury. And that meant their bonds were easier to sell. They could borrow at lower rates than they would be able to otherwise. And so they got gigantic. And then when they failed, we were on the hook. It was not part of the federal budget, but we ended up having to take over Fannie Mae and Freddie Mac and their $5 or so trillion of debt. And so that was something that never showed up in the government budget. But then one day we owed $5 more trillion than we thought we did because these guys failed. And you could extend that to the entire money center banking system in the U.S. and say that we're really on the hook contingently for J.P. Morgan Chase's derivatives and Goldman Sachs's prop trading desk. Because if those guys fail, we as taxpayers have to take over their obligations because they're too big to be allowed to fail. And so when you start thinking like that, you get up into the hundreds of trillions of dollars of liabilities. And then, like you said, there are all these public-private partnerships at the state and local level that are out there building shopping malls and roads and other things that don't show up on anybody's balance sheet and yet are our obligations if they fail.
Exactly. And they are. They're schools, they're hospitals, they're every public building and infrastructure, bridges that you can imagine all fall into these categories.
Yeah, so we're building these things and we're taking on the debt off balance sheet. Nobody knows about it.
Some of it's on the balance sheet, but vast majority of it. The easiest way to think of these is it's almost like reverse mortgages. Mm-hmm. And so we're allowed to stay in the house and we're getting money and we think we own the house, but we don't. And it all kind of works until all of a sudden there's a drop in the property value, and so, or depending on how your agreement's structured, and suddenly the money comes due or the house is taken. And so these things can go bad very, very quickly, and they do. And all it takes is some kinds of default, some kinds of a currency crisis, debt downgrades, a counterparty, a default some way, and then it quickly starts to cascade. And we've talked about that, the possibility of collateral contagions in previous shows. This is very, very frightening. Not just the size of it, but how little it's understood, reported on, and managed. It's all out there under the rug, and I don't think there's anybody, including the Secretary of the Treasury, who has a clue of how big it is.
No, but this explains the sense of panic within the world's central banks, when they're out there saying, we'll do anything it takes and we're going to explicitly target inflation. These are crazy policies based on our past, but they make sense today because these guys, even though they don't know the actual number, they know it's so big that it would be catastrophic if even a small fraction of our contingent liabilities went bad. That means that Chicago cannot be allowed to default, even though its pension plans are grossly underfunded, because that would set off a chain reaction. California can't default. Goldman Sachs cannot be allowed to fail no matter what happens on its trading desk. And the list goes on and on. Nobody can be allowed to fail now, because it would set off a cascade failure of all this hidden debt, all these liabilities that nobody knows are out there, but will blow up on us if any serious entity in the global financial system right now fails. And that also explains the Eurozone jumping through all these hoops to keep some little piddly thing like Greece in the Eurozone. 2% of the economy. Why spend 2 years doing nothing but work on Greece when you could just remove 2% from your economy and then, direct your efforts to making the other 98% work? Well, they can't do that because Greece alone would be enough to take down the global financial system because of what you're talking about, all these hidden liabilities out there. So we are so fragile right now that any exogenous shock would send us over the edge. And the guys in charge know it. And they're just trying to buy time and hope they can roll up some of these assets, or these liabilities. But in the meantime, we're creating more. We're actually becoming more and more indebted over time and making the system more and more complex and fragile. So nothing is being fixed. It's actually getting a lot worse, and it's already beyond redemption.
It's getting worse, faster, and faster. When I was doing the Sultans of Swap series and suddenly saw the magnitude of some of these issues I just mentioned, it was very clear to me what was going to happen in Europe very quickly. It really showed me how interest rates, the rate at which they're going to come down and the level that they were going to go to. I'm still expecting the 10-year bond to go to 1%. John, or 1.2%, on this track that led me in our understanding financial repression, which has now led me to see the magnitude globally of this flywheel that they can no longer stop nor control. In September, we went to QE3 and everybody was talking about how we had never seen unlimited. Here we are, QE4 in December, less than 4 months later. January, we've got Japan taking it to a whole other level. We've got all 4 major currencies in the world: Japan, the Japanese yen, the euro, the sterling, and the dollar. Now, frankly, with full policies of unlimited money printing. And a year ago, we weren't talking anything about unlimited, but it was perfectly predictable. The same way as what is predictable now is it's going exponentially in volume and in time. So the crisis is picking up speed. I don't mean to preach doom and gloom. We will come out of this at some point where there will be a market clearing event, an adjustment process, and we will reset to some kinds of system that will work. It's not the end of the world, but it's going to be a very, very painful transition. And the longer we've taken to get there and the more we've papered it over, the worse the medicine's going to be when it arrives. And I see in 2013, maybe 2014 is when it arrives. I've had papers out since 2009 with diagrams that's clearly pointed it to late 2012, 2013. So, and in a sequence of why it would lead to, and these diagrams all led to this era, and it was going to stem out of the swaps and a political issue. And at the time I originally put them together, it was starting with a financial crisis, and it was starting with credit default swaps. And it moved through the financialization, both the instruments, and as we went from financial to economic to political crises. And the roadmap's been very, very clear. And it's not that it was that bright. It's just that when you get inside these and you see the problems for what they are, it's not hard to see what's going to be the inevitable outcome. The problem we have is we have so much misinformation, lack of information, and just frankly deception going on that I think even the politicians themselves are dealing with a book that's got half the pages missing.
Yeah, we're clearly past the point of no return here. And the only question is how much further, into no man's land can we go? Because the bigger these numbers get, the harder the transition will be. It's going to be horrendous regardless, but it could be worse. Because remember, if we're going to cut our total obligations in half, which we really have to do at least in order to get back to some kind of a sustainable growth path, every one of those assets that has to be wiped out belongs to somebody. It's part of their wealth. So it's part of a bank's balance sheet, or it's part of the asset base of a city or a state. And those assets have to go away. So those companies or those individuals or those municipalities have to get poorer and lose the ability to do some of the things that they would have done otherwise. And we're talking about such gigantic numbers now that we're talking about massive impoverishment of a lot of entities in society. And there's no way around it. To get rid of these numbers, somebody has to lose. And when they lose, everybody who depends on them loses. So we get much less rich as a society through this process.
John, we're up against our hard line, a fascinating subject here. I hope we didn't get too technical for a lot of our listeners, but hopefully can get a sense of when you listen to the debt ceiling discussions, you understand that it's just really noise and camouflage because we're not really talking to the magnitude of the problem. And they know it, but it'll allow us to paper over and simply buy some more time. John, I think they thought that maybe growth was going to get them out of their problem originally, but as they've learned, many more and more of the politicians starting to understand the real gravity and magnitude of what we just talked about. They know that there's no other solution, that they can buy time until there's a market clearing event or a huge crisis.
Yeah. Let's finish up with the concept of growth here, Gord, because it's kind of seductive to think that, well, once the economy's firing on all cylinders and everybody's at work, we'll have all this tax revenue coming in and we'll be able to pay off our debts. But what people don't get now is that growth, we're so indebted that growth can only happen with the addition of more debt to the system. That's the only way we can have an economy where people are working again and some tax revenues are flowing in. But the amount of debt that we have to take on dwarfs the benefit of the tax revenues that come from more people working. So trying to grow our way out of our problems by borrowing more money and dumping the proceeds into the economy actually digs us deeper in a hole. So the solutions that the governments of the world are trying to implement right now are kind of the equivalent of using leeches to bleed people back in medieval medicine. It makes the patient worse rather than better, and we don't know that yet, but we will find out soon enough.
I have to break. Could you tell our listeners how they could learn more about your website?
Sure. I run dollarcollapse.com, which covers a lot of what we talked about today.
Appreciate the time. Talk to you next month.
Great. Look forward to it. Thanks, Gordon.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.